What's up guys, today I'll be talking about why there's no excuses for you to start investing into the stock market at a young age. My name is Kevin Murray and this channel is all about personal finance tips and long-term investing. A lot of common questions I get for myself when someone asks me, how do you invest into the stock market? Isn't the stock market rigged? How do people even make money in the stock market? How do I start? Which stock should I pick for the long term? Those are great questions and I'm going to answer them in this video. And it really starts with the mindset and your psychology for investing into the stock market. And the most winning strategy in the market is called long-term investing. Just the basic strategy is buying and holding. Let's look at the great Warren Buffett, greatest investor of all time. What does he do? He picks and buys for the long term. He buys and holds forever. His famous partner, Charlie Munger, does the same exact strategy. It's so simple. But most people my age that are young, that are in college or even in high school, like to earn money quickly, getting that short-term satisfaction of creating wealth. But there's no such thing as that. A lot of people like doing day trading, option trading, even crypto trading too for the short term. Sure, there might be good strategies, but for the masses, it's not sustainable. If it was, I would be doing it. Take a lot of time to learn more about how the market works, how it functions, and like the mindset and psychology of being a great investor for the long term. And there's like an interesting fact. Over 90% of option trades expire worthless, meaning most people that play options lose money in the short term. And Warren Buffett, his type of investing is value investing. It's more complex and he reads financial statements pretty much each and every single day, 8 hours a day, catching up on his latest companies. These financial statements are 10Ks. Each company that's publicly traded on the stock market has these things, and they tell you everything about a business, from their basic business model to their risk factors and to their financial statements. And it takes a lot of discipline and patience to read these financial statements that are hundreds of pages long. Realistically, most people don't want to go that route with investing. It's kind of boring. It takes a lot of discipline and patience and really understanding that basic accounting language. That's kind of like what I do. And like the perks of picking individual stocks as a long-term investor, you could beat the market if you know what you're doing. Understanding that company on a high level, understanding the psychology of the market, and knowing like the fundamentals of how to evaluate stocks if they're quote-unquote overvalued, from their PE ratio to the price to sales ratio. How should everyday people that don't know anything about financial literacy or how to invest? And I kind of like recommend people to play the long-term game. Wealth is created over time. And I tell them to invest into index funds. Index funds give you conservative gains between 6 and 8% each and every single year. They track the market like the S&P 500 and you really don't have to do any work. You just have to be aware of that index, and B, you just have to cost average up each and every single month. These index funds consist of a basket of stocks. Most people, I tell them to invest into an S&P 500 index. And this index consists of the 500 largest companies in the US that kind of reflect the US economy. What specific companies reflect the American economy? We could say Facebook, Amazon, Microsoft, Apple, Tesla, Ford, Bank of America, JP Morgan, airline companies, industrials, Home Depot. So any company you can think of, it's probably in the S&P 500, Starbucks, McDonald's. Instead of owning like 500 separate companies, you could own all these companies into an index fund. And you could buy an index fund on the stock market. You could buy one index fund share, and instead of trying to do research, reading all the 10Ks for all these 500 companies and picking the best, you could just invest in an index fund. It takes no work. And historically, the market has returned to 6 to 8% each and every single year compounded. My favorite ticker symbols that I tell people to invest in, VOO, VOO, or SPY, SPY. Pick one and invest in it each and every single month. Allocate a set amount of money you want to invest in and just cost average up. They return the same amount, give you conservative gains, and you'll be multimillionaire if you start now in college. And everyone starts somewhere investing. If it's even $10 or even $100 a month or even $1,000. Everything counts because compounding will take effect for the long term. The more you have of it, the more it's going to grow. You won't see compounding taking effect the first 4 years of investing, but over time you'll see how much it grows like a snowball rolling down the hill. Another strategy you could do besides investing into an S&P 500 index, you can invest into a total stock market index. It's the same concept. You get a basket of stocks, but essentially in this index, you own over 3,000 companies. So you get everything in the stock market, from penny stocks to large cap stocks like Tesla or Microsoft or Facebook or Apple. So you get a broader range, but the gains are exactly the same. It depends on your diversification level and your risk. Like, it doesn't really matter. My favorite ticker symbol to invest in, if I wanted to invest into a total stock market index, is VTI. Every brokerage has this ticker symbol or index, and you just cost average up and you can make millions over the long term. At my age, index funds are not a popular form of investment because A, if you think about it, at our age, we have decades to compound our money. B, we could take more risk. And C, no one really wants conservative gains. But if you want to create wealth, multi-million dollars of wealth over time, that's how you do it. Investing into an S&P 500 index or total stock market index. Pick one, cost average up, and that's it. Think long term, and it's really that simple. That's how you create wealth over time. But if you're younger, you could pick, if you want to do this route and take the time to pick individual stocks like what I do, you could beat the market 2x to 3x. But it takes work, like dedication. And you could do it if you know what you're doing. Understanding 10Ks on a high level, running projections, and just having that mindset, buy, hold. And the market is psychology. And there's like really no excuses for you to start investing. If you're not willing to start now to create that habit for yourself at a young age, when are you going to start? Are you going to start when you make 50 or 100K? Probably not, right? Don't make fake excuses, because the earlier you start, the more compounding is going to take an effect. And you thank yourself later in life when you want to retire. If it's 59 or even in your 40s, have a long-term mindset, being unemotional. You're not attached to the short-term fluctuations of the market. You don't care what macroeconomics tells you in the short term. You don't care what the mainstream media tells you anything about stocks. There's no such thing as getting rich in the stock market in the short term. No one does it sustainably. This kind of helps visualize what like an index fund is. And what you're seeing here is the 500 largest companies in the US. And this is the S&P 500 index. This is what I was talking about in my video. And we see Apple, Microsoft, Google, Amazon, Tesla, Home Depot, Procter & Gamble, Honeywell International, Pfizer, Visa, MasterCard. So you see in this index, you have a lot of companies in a lot of different sectors you're investing in. In an index fund, you're diversified in all of these sectors, from technology to consumer services to consumer cyclical to healthcare. And you really don't have to do any work with this. Historically, the market has always been going up 6 to 8% each and every single year, and pick one index you want to invest in. Like the VU is an S&P 500 index, which is this. And see over time, historically, the market has always been going up. And you just have to cost average up. I know I'm emphasizing this in the video. Or you could do the SPDR or SPY index. It's the same exact thing. Lastly, you could invest into a total stock market index, VTI. And I suggest pick one, VU, SPY, or VTI, cost average up each and every single month. It's a winning strategy. You make millions if you do this process. Investing into an index fund, having a long-term mindset, buy and hold 30, 40 years, and that's it. Thank you for watching. This is how you become a millionaire. Peace out.